Today, we will talk about Stock Market for Beginners 2023. So before we get started, make sure to hit that like button, also subscribe to my channel. What is stock trading? Stock trading is the act of sharing, swapping, buying or selling part of a company's ownership. The stock, also known as the share, is a fraction of an ownership that a corporation is willing to put on the stock market. Those who buy or have ownership of these shares become known as the shareholders. Holding shares in a corporation can lead to considerable profits, as the shareholder is entitled to a percentage of the corporation's earnings and assets. Stockbrokers, those who operate in the trading of a company's shares, are often the first point of contact when dealing with stocks. They work as advisors, representatives of a respective corporation's stocks, or as stock managers. Stock trading in the days before the rise of the mobile phone and personalized computers took place in designated stock brokerages. These still exist today. However, now it is possible to trade stocks over multiple electronic trading platforms. What is the difference between investing in stocks and funds? Stocks. Stocks refer to ownership shares in individual companies, whereas funds refer to a collection of assets. For example, stocks, bonds, commodities, real estate, managed by an investment professional. When you invest in stocks, you're buying ownership in a particular company and are subject to the performance of that company. The value of the stock will fluctuate based on the company's financial performance, industry trends, and overall market conditions. Investing in individual stocks requires a significant amount of research and analysis to determine which companies are likely to perform well. Funds. When you invest in a fund, you are buying a diversified portfolio of assets managed by a professional. This can help to spread the risk of your investment and potentially generate a more consistent return over time. Funds can be actively managed, where the fund manager will make decisions about which assets to buy and sell, or passively managed, where the fund is designed to track the performance of a specific market index. Overall, investing in stocks requires a higher level of knowledge and research, whereas investing in funds provides a more diversified and potentially less risky approach to investing. How does stock trading work? Today, as long as an individual has access to an electronic trading platform, they can get involved with stock trading. Long gone are the days of exclusivity. Now, as long as you have access to consistent Wi-Fi and a decent smartphone, you can become a stock trader. How stock trading works has changed dramatically over recent years. There is no longer any need to be within a physical trading marketplace, and trade can be conducted through online stockbrokers. The stockbrokers still use the same stock exchange markets in order to value the stocks they are trading. Companies wanting to trade their shares use these exchange markets to list the stocks available to stockbrokers. Once the calculations to gauge the value of the stocks on offer have been completed, the stockbrokers are invited to purchase and then sell the shares on. This process is one of supply and demand. The more a certain listed share is bought and then sold on, the greater its price will be. As well as the cycles of trade that surround certain stocks, their prices can be determined by other external factors. For instance, a corporation's stock may have featured heavily in the news, driving investors and stockbrokers toward it. A good example of this is GameStop stocks becoming highly popular after a series of news stories. The price of the stock rocketed during the end of January 2021 and subsequently plummeted as shareholders were quick to offload the stocks they held. To start the process of stock trading, there are a few stocks to keep in mind for initial investment. The best stocks to start trading are those that are secure and certified. If you are new to stock trading, it is best to keep to proven stocks with strong sustainability. Stocks such as Facebook, Microsoft, Netflix, and so on are good stocks to start with. To make money on these stocks, you would have to invest large amounts of money. But the major advantage of these stocks is that they are very low risk. Are there different ways to invest in stocks? To invest in stocks, you have to be willing to put investment forward. How much you are willing to invest will depend upon your knowledge of the stock market and your income. The stock market is filled with a variety of potential investments that are not just limited to a share in a corporation's ownership. Stockbrokers are able to invest in the bonds and debts of companies, the funds in which they are trading with other corporations, and even the property that corporations are investing in. With so many options, it is understandable that those new to stock trading will feel apprehensive about what stocks to approach. However, it is important to note that the stock market is only as complicated as you want to make it. How much do I have to invest across each stock? Calculate your earnings and how much you are willing to lose. Such a tactic may seem pessimistic, but it is essential that you don't risk investment too far outside of your means. It is important to consider how many stocks you want to invest in. You may want to heavily invest in 2 or 3 stocks, or you may want to diversify the shares you have investments in. This is known as your stock spread, and traders generally use such methods to calculate how much they can handle. How much time do I have to invest in the stock market? Money is not the only currency in stock trading. The time spent on studying the patterns broadcasted over the stock exchange markets is as significant as the money itself. You must be aware of how much time you can put towards stock trading. If it is more of a hobby, then you may only have a few hours a week to spend studying the stock market and making investments. On the other hand, some stockbrokers work tirelessly and spend their full working days watching the shift in stock values. Your experience with the stock market will determine how you want to approach trading. It is best to be patient at first. What do I want from stocks? Some stocks and shares are worth more than others. Equally, some stocks take longer than others to develop in value. What type of approach you want to take will determine the stocks you want to invest in. If you are looking for trading to be driven quickly, you may favor day trading. Stocks in this market are only exchanged and priced over the course of a day, meaning you have a fixed time to invest in the stocks available. If you are in even more of a rush, you can try out scalping. This type of trading is done over the course of minutes, even seconds. The thrill of scalping is something always discussed, but it can be risky due to its exceptionally short time frame. In contrast, you may be more methodical in your approach to stocks, and you may want to spend a considerable time watching the development of your stock spread. If this is the case, you will favor more position or swing exchange markets. Who are you trading with? As you enter the stock market, you can do so as an individual or part of a company. If you are stock trading by yourself, the workload will of course be more than if you were part of a team or had advisory members around you. Being an individual stock trader requires some serious research into the performance of multiple stocks, the forecasted returns of all investments, and some serious caution. If you are not sure when to invest further or sell part of your spread of stocks, the risks could potentially be financially damaging. However, trading as an individual comes with distinct rewards. You have complete control over your spread of stocks. And likewise, what do you think of our video? Let me know in the comments section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.